two, not two. You don't about to do what? Walk in that door.
All right, let's go ahead and start. Do you want to take over?
I will.
I've been empty. When I'm low, you fill the cup, yeah, but my ego fights back, telling me that I'm ready. Grab the wheel and take control, but I'll crash if I don't let
Your
myself.
music still playing there.
I know.
You go ahead and cut the music. It's not coming through good at all.
Okay, I got it.
All right. Welcome everybody to I guess our last financing Zoom of the year. And it looks like we're gonna have a good turnout. You never know what to expect when we're this close to the holidays. So
Yeah.
I appreciate everybody showing up, and hopefully it'll be a good one. So
Yeah, let me go ahead and start off for the recording.
okay.
So hi guys, how are you? Happy Wednesday. Welcome to the Multifamily Freedom Chasers Financing Zoom. My name is Shelley Miles. For those of you who do not know me, I am an author and a commercial mortgage broker and co-founder of our brokerage company, Adventure Commercial Capital, together with Mr. Jerry Miles over there, who most of you probably know already. If you guys are new and this is your first time to this Zoom call, just go ahead and put a 1 in the chat so we can see you and maybe give you a chance to come up and speak and introduce yourself so you can connect with other real estate investors. While you're doing that, I want to thank you guys for being here. So what our company does is we connect real estate investors to lenders, real estate investors that want to buy multifamily, fix and flip, storage units, hotels, any business that has real estate attached to it. Because each investor is unique and each deal is unique, and we have the skills to understand what you need to connect you to that lender. Also, I want to remind you guys, and if this is your first time, let you guys know also that we use this platform not just for education, but for you guys to connect with each other in the chat. You can put your information up there, connect with people in your area or your buy box or your market. Yeah. So Jerry, you want to go ahead?
Yep, I sure will. And just to reiterate, make sure to connect with others in the chat. We have had people. We've been doing this Zoom for about a year and a couple months, I guess now, or a year and a month. And we do know of people that have done business together through the chat. They've met each other in the chat, and they've connected, and they've actually done business together. So there's high level people in here. There's new people and everything in between. So make sure that you get yourself known there.
Yeah, we got a couple new faces here. We got Chelsea and Byron. Nice to meet you guys. Hopefully you guys get a chance to come up and talk. We're going to give you a chance to do that. If you want to raise your digital hand at the bottom of your screen, that would be great. It'll help us out. You want to go ahead and start, and then if anybody wants to come up and talk, they can.
All right. We'll do today's agenda. We will be going over the community ecosystem, introductions. We'll tell you a little bit about ourselves, and then give each of you a chance. Well, give a few of you a chance. We don't have a lot of time for that, but we can give a few of you a chance, 2 or 3 of you, to come up and introduce yourselves and tell us who you are and things. And we'll go over the current debt market, and then the main topic: what are the top 5 factors when investing in real estate? And then at the end, we'll do a question and answer. So I know I see some people in the Zoom here that were at the summit last weekend. So if you were at the summit last weekend, put a 10x in the chat and let us know that you're here. And I'm not looking at the chat, so if you want to keep an eye out for it.
Yeah, Byron, he looks like he was in
Yep, I remember Byron.
real estate
Yep,
summit.
I sure do. So this is a Multifamily Freedom Chasers Zoom. And just want to introduce you guys to who the Multifamily Freedom Chasers are. This schedule is going to change a little bit come to the new year, but we do 4 to 5 Zoom calls a week, introducing people to new concepts in real estate, how to evaluate real estate, how to talk to brokers. Ours is on financing. We have an activation Zoom where we'll have celebrity guests and things on. And all these Zoom calls are free. And there's a lot of information on here. So plug into the community. We have a Facebook presence, and we also have a WhatsApp group that you can connect with as well. I believe the Facebook page has I don't know, 16 or 1,800 people now as a part of it. So connect to the group. A lot of good people, a lot of investors and things in there.
Yeah. JJ, do you have the link to put in there?
So he does. He'll put it.
Okay, he's gonna put the Facebook link in there. And those of you, if you're new here, I see Chelsea was also at the Real Estate Summit. JJ was gonna put the link in there, and you can click that and just follow us on Facebook, and you'll get all the updates for the events.
And JJ is one of our sons, so wave everybody, JJ. He's a YouTuber and comes on here to help us with the tech and keep us in the right direction there. So he's a senior in high school this year. So, but who are the Miles? That's me and my wife and our 2 boys there. We're commercial mortgage brokers, co-founders of Venture Commercial Capital. We're also real estate investors. We've been in the construction business for over 20 years. We started our brokerage about 4 years ago. And we lend on commercial real estate nationwide. If it's investment real estate, we have a home for it as far as funding goes. If it can be funded, we can fund it. So not all real estate is financeable, especially in today's market. And if you happen to have one of those and trying to get it done, we'll let you know that might be a losing battle. But that's us. And, we're here to serve the real estate investor community. So who are you? If you want to raise your digital hand, about 30 seconds to a minute each. We can probably fit 3 of you in if you want to introduce yourselves. So if you want to go ahead, JJ, and break the ice and go ahead and do it, man. Tell us who you are.
I was looking for the stupid hand raising thing. I couldn't even find it, but
If you go, okay, I'll let everybody know. If you go to the bar on the bottom or the top of your screen, I don't know, some people's computers are different. I can't find it in mine now, but I'm the
it
host.
says
It'd
reaction.
probably be in more. Like if you go, there's more.
Well,
There's
there's
a
one
little
called
reactions button. I
Actions.
found it. Yeah, and it says raise
Hit
hand.
reactions, and there's a place to raise your hand. So, but go ahead, JJ, introduce yourself.
All right, my name is JJ Miles. I am a YouTuber. I just really like making videos, and I really like business. So I was looking for an easy way to make money, as a small child, like when I was like 15 or whatever. And I found YouTube, and I actually fell in love with making videos, and I'm trying to blow up now. I'm very analytical, and I like looking into the analytics of videos, retention, and how to get people to click on videos. I just enjoy all that stuff. So I've learned a lot about YouTube. I have a lot of big connections, and also a lot of big connections within the real estate world, which is really cool too, because I join all these calls and stuff. So yeah, it's pretty much me. Just some dude that likes business and YouTube.
Thanks, JJ.
From
Anybody else going once?
Yeah, if you can't find the digital hand, just go ahead and unmute and talk. We'll allow it.
Yeah, that'll be fun too.
Hey,
guys.
Shelly. Hey, Jerry. It's the
Hey,
Hawk.
what's up? How's it going,
Hey,
man?
hey, guys. No, good to see you, JJ. So I'm the Hawk, man. I've been in real estate for about 10 to 15 years. Started out residential. Now I'm deep into multifamily. I have about 200 assets under management. and we're looking to do some big things in 2024. So just happy to be here, happy that you guys do these calls, and just looking to network with people. So great, thanks.
Awesome. Good to
Awesome.
have you
Did
here,
you
man.
not go to the real estate summit this year?
No, I couldn't. My daughter's birthday was yesterday, so we had a birthday party planned that weekend, so I couldn't go. So
Oh, yeah.
she turned 8. Yeah,
Oh, how sweet.
Well,
Tell
cool.
her happy birthday.
I will. Thanks so much, guys.
There's more important things than real estate, I guess, huh?
Yeah.
Yeah, yeah. All right, man. All right, Byron, go ahead, man.
Hey Jerry, hey Sherry, pleasure to meet you. Jerry, it was a pleasure to meet you down in Miami.
Yeah, for sure.
Currently in the Austin real estate market right here. Currently still an employee for a tech company here locally, but been doing video production myself for several years and starting a business for video marketing with a focus on real estate as well. Looking to get into multifamily investing here over the next, quite a bit of investments over the next year in 2024. I have already applied a little bit to Cardone Capital, but nothing has been funded fully to any project that they're evaluating at the moment. Supposed to be on the Paragon, but it sounds like they've had some issues with that deal closing already. It sounds like they're going to be working on something in Fort Myers or Tampa area. So officially no doors yet, but soon to come.
Yeah, nice. Cool, cool. It's good to see you again here, man.
Good to see you as well, Jerry.
Awesome. Great to meet you. Glad you're here.
Nice to meet you as well, Sherry.
All right, Mike, is it Michael?
Michal, hey guys, this
Michal,
is
okay.
Michal Paska,
Okay.
based in Anderson, South Carolina, upstate South Carolina. I'm a small investor, and I'm here basically to learn. I like what you do. I like that you do it for free. Fantastic, compliments to your son. I have also son and daughter. She's 15, he is 13, so it's amazing.
Awesome.
Congrats, Miles, fantastic. Well, again, it's just no big deal. I'm not a big investor, nothing like that. But would like to, network with people. Again, based in South Carolina, starting in single-family homes. But in the future, once I get a little more capital, would like to switch to the multifamily.
Yeah, awesome. Well, glad to have you here, man. And yeah, don't say I'm a small investor because I mean, if you own a home that you're renting out, I mean that's more than most people in the world have, So
Yeah,
so count your blessings there, and just move up from there if you want to get bigger. But
I'm
don't make light of it, man. I mean, there's a
yeah,
lot of people out there
I'm
that want to
very
be in your
happy.
spot.
I'm very happy. I'm very grateful what I have, to be honest. Yeah,
Awesome, awesome.
and would like to build from there and
Yeah,
go further and hopefully faster.
awesome, awesome.
Awesome.
Good to have you here, man.
Great to meet you, Michal.
All right.
Shelly, my apologies. I called you Sherry earlier.
That's okay. That's not the first time I've been called Sherry, so
She gets that all the time, so
it's okay.
I'll be better about it. I get called Brian all the time, so I know how it is.
Not a big deal, man.
yeah. All right. All right, so this is our contact info. That is my cell phone number. If you take a picture of the QR code there, that'll take you to my Hi Hello card. And that is mine and Shelly's email addresses. So if you want to take screenshots or whatever there of those, we'll come back to that screen at the end too. But we will get into the current debt market. So where are the current rates? The federal funds rate. We're still the highest that we've been in 22 years. Coming, 5.25 to 5.5. The 10-year Treasury today, the last I looked at it was 3.92. 4 weeks ago, we were at 4.49 or 4.5. 6 weeks ago, we were almost at 5. So, let me see what it. I didn't look at it again later in the day. So, yeah, 3.92. So that's the 10-year Treasury. Most of our rates that we have, when we're looking at multifamily, You know, Fannie and Freddie debt is based off of the 10-year Treasury or 5-year Treasury, depending on your term that you're getting. But if you look at the Treasury rate and you add a 1.8 to a 2.5 on top of that, that'll give you what your rate, a good range of what your rates will be on a multifamily. So, and you can find that the 10-year, 5-year Treasury, you know, if you just type it into Google, current 10-year Treasury rate or current 5-year Treasury rate. So, there are going to be more opportunities coming to the market. You know, we get calls on a weekly basis from people needing to refi deals, and they owe more on the deal than we can refinance them for. And there's a lot of them out there. Just in the last 2 weeks, have a borrower that has a $19 million a loan on an apartment building, and they're paying cap on this, and they're needing to refi, and the most we can get them is you know, somewhere in the 14 million range. So if they want to refi, they got to come up with 5 million to be able to refi. And got another hotel recently that we had somebody come to us. I think their loan they was needing to refinance, their bridge loan is at 8.5 million, and the most we can refi for is 5 million. So if they need to if they want to refi, they're going to have to refi and bring like 3.5 or 4 million to the table to be able to refi. And most owners just don't have that cash on hand, you know, to be able to do that. So there's going to be, you know, some pain in the market as these bridge lenders get more insistent with these people that have the loans out. You know, they're going to force sales. They're going to do different things, and really the property owner, the current owners of these properties or these deals, are going to have to do something to, you know, because they're paying adjustable rates, and you know, things are getting bad on their hands. So, you know, just for an example, that hotel, they owe 8.5 million. Right now, the hotel might sell for 7.5 million or 8. So if they was to sell, the lender's going to lose out, the owner's going to lose, and you know, they probably originally bought that hotel for 11 or 12 million. So they've got 3 to 4 million in equity that's just going to vanish in thin air when they go to sell as well. So that's when we talk about pain in the market. You know, those are the things that are going to be happening to people is, you know, because of the interest rate hikes, it's forcing this onto the market. So these numbers here and things, if you were at the real estate summit, this is what Grant was saying at the summit, is there is a major correction underway. There's $2.7 trillion of debt maturing by 2027. So these are loans that are going to be maturing. When they mature, they go to an adjustable rate. So their rate right now might be 2.5%, 3.5%, 4.5%, and they're going to go from that. If it's a hotel, they're going to be up over 7%. If it's multifamily right now, they're going to be at 6.5% to 7%. You know, depending on the deal, maybe 5.5% to 6.5%, 7%, somewhere in that range. And a lot of them, that's going to take them out of cash flow. So there's going to be more and more deals coming to the market that need to sell and need to sell quickly, and they're going to be forced to sell by the banks, the ones that can't keep up the payments. You know, some of these loans, as the cash flow goes upside down and they're not meeting their debt service coverage ratio, their debt service coverage requirements, it's going to force the bank into a foreclosure because they're not at their debt service they agreed to with the bank when they signed on the loan. So there's going to be a lot happening, and I think we're really just in the beginning of it. Now, if the Fed comes tomorrow and bumps the Fed rate down to like 3% or something like that, 2.5% or something, I mean, that's going to correct everything right away. But in this current, right where we're at right now, you know, I can't picture them doing that. You know, they don't want runaway, and they don't want that inflation to run away from them. And if they did that, I mean, inflation's going to go crazy, crazier than it's ever been, I would say. But That's just my take on it. But for, over 500 billion in debt maturing 2024, over 500 billion maturing in 2025. So go ahead, Jeff.
I have a quick question about all these properties going to be up for sale and all this lack of equity disappearing.
Yeah.
What is this going to be, the money that the limited partners in most of these deals, is that going to be their money that's going to disappear? And what will happen to them?
They're gonna lose.
Their money just vanishes and they're out of business then, basically.
Yeah, and I mean there will be certain cases where the bank will bring them on if you have a bank or a lender that wants to help out. They could possibly help some of these people out. I don't really see that happening. But there's been cases where the bank has come out, let that equity roll in somewhere else, but that's really, really a rare occasion.
So we're going to lose a lot of investors over this too.
We will, and so as you're going out to raise money for deals, this kind of stuff really hasn't hit the news cycle yet. But when CNN and Fox News and all the different news channels or propaganda channels, whatever you want to call them, whenever those all get a hold of it and they start running stories about this school teacher lost all this money, or senior citizen lost their life savings, all these things they're going to be reporting on, I would say, over the next year or two. It's going to get real hard to raise money for deals. So building those relationships and getting that network of people that are going to trust you to run the deal right is going to be tougher and tougher. But the people that can build those relationships are going to win in this down cycle. So, yeah, thanks for the question. So, all right. So on with the main topic tonight is top 5 factors to consider when investing in real estate. And I want to give credit to Shelly for picking this topic, because every other week for a year she asked me, hey, what should our topic be? Because she wants to start putting it on the email list and everything. And every week I run out of answers, and so then she said, all right, here's what the topic is. And so then I went with it. So I think it's a good one. So top 5 factors to consider when investing in real estate. Number 1, and I think the most important, factor out of any of them, is location. Location, you hear it all the time. Location, location, location. But you can't change the location. You can change the color of the brick, or you can level a place and build it new. You can do all kinds of things to a place, but you can't take that location that's maybe in the middle of Detroit and you can't move it to Fort Lauderdale, and that's just the way it is. So the things when we're looking at locations that are good, that lenders look at. And when you're looking at property, it's good to look at it through a lender's eyes. A lender is going to be your partner on the deal. If you're not looking at it through a lender's eyes, you're going to go down the road, underwriting and doing all these things with a property, and you go to the bank and the bank might not like the deal. And I'll tell you right now, there's a few places in the country where lenders won't lend. And there's local banks that'll lend in these areas, but lenders just will not lend in certain locations. So anywhere with a lot of crime, most lenders will not touch those projects. I will tell you, there's 2 cities that in the higher crime areas in the country that have twice the national average of foreclosures on investment real estate. And one of those is there's some neighborhoods in Detroit have twice the national average of foreclosures. And then there's some neighborhoods in Chicago that have twice the national average of foreclosures on investment real estate. And so when you're in an area that has a lot of crime, I mean, I don't really need to explain it too much. I mean, if it's dangerous to go collect your rent, the lender really isn't going to be interested in owning it if something happens to it and you're not able to maintain the bills and things on it. So higher populations close to metro areas. Lenders like higher populations. They like you to be close to a city center, the suburbs, of a big city, inside the city. Lenders like those areas. Grant talks about this one all the time, of high barriers of entry. So if you want to get into that area, it's going to cost you. If you want to build in that area, it's going to cost you even more. And he talks about going to areas. He likes Miami because Miami is really constrained on how it can spread out. It really can't spread out from where it's at. Because you got the Atlantic Ocean on the one side stopping you from building new. You got the Everglades on the other side, and it really holds everything in. And so the land is limited. And so that just raises the value of the land. So if you own land there or you own property there, the values are going to continue going up because they can't go out away from there and build, within a good distance of the city where people are working and things. So you want to look for positive migration. Go to a state or a city that has people moving in and not moving out. Place that has a lot of jobs, that goes to the higher populations and city centers, multiple employers. Lenders really don't like to lend on, military housing. Because if we go to war and a bunch of guys get deployed, the wives might leave the base where their husband was working and go back home, and there's no repercussions. They can break their lease because they're deployed. So lenders don't like, military bases. We can still lend on them, and but you're not going to get the loan to value that you want, and you're not going to get the best rates and terms. Jobs. I said, jobs, multiple employers. They liking less and less college towns. So agency debt. Fannie Mae. They used to lend a lot on, student housing. They're pulling back a lot on those since COVID. So in our area here, just as an example, we're in Northern Kentucky, the Cincinnati area. So we've got some major colleges close by. UK is an hour away. University of Kentucky, University of Cincinnati is a half hour away. University of Louisville is an hour and a half away. Those colleges, Fannie Mae will lend on student housing in around those colleges. But the smaller colleges, we have Northern Kentucky University here. We probably wouldn't be able to get a loan on student housing there at Northern Kentucky. Or Thomas More College is a small college here. We couldn't get a loan on a deal there just because they're not as the name isn't as big, not as many students, those types of things. So like I said, location's important. The next one is when you're looking at real estate, something very important to find out is, why is the person selling? We're in Grant's Real Estate Club. Every week, Wednesdays, we have a club meeting call, and people bring deals to the club and present deals. And that's one of the first questions Grant asks everybody. Why are they selling? And it's important to understand why they're selling. They could have a loan maturing, could have been a death. You could have partners fighting, whatever it is. Or they just maybe did well with the property and they're cashing out. But what is important to find out, you want to know why they're selling, because it might be leverage for you as you're going to negotiate. If they're having troubles at the property, or like I said, if their loans matured, they're now paying a higher rate, they can't afford to, maybe their insurance is going up, lots of different things to think about. And did they have problems renting problems with keeping good tenants, getting people to pay, and when you find these things out, is this a problem that you will have to inherit? Is there problems with the sewer or the different things that might cost a lot of money down the road that they're maybe thinking, hey, maybe if we sell this, we're not going to have to pay these things later. Really, really dig down and find these reasons out, and especially in this market. If somebody has good debt on a property, they don't, they're not upside down, these types of things. Why are they selling now when the prices are going down? And if they're selling now, they need to have a reason. And they could have gotten 10 or 20% more a year ago, 2 years ago. And if you wait another 2 years from now, you might get 20 or 30% more. So in my eyes, if they're selling now, there has to be a reason, and you probably need to find out. And you don't want to inherit these bad problems. If you're in an area that there's maybe this property doesn't have a real bad problem with crime or people tearing things up and stuff, but maybe across the street there is a project or a property that doesn't screen their tenants well. Maybe they have a lot of crime and causing commotion, and it's overspilling into this complex, and you can't keep good tenants. That would be examples of problems that you really can't fix if you own this property, because you're not managing a property across the street. So why are they selling? If there's problems, maybe they did well, that's just time, or are there problems, something that you can fix is what you really need to find out before you go into this deal. So number 3, the asset quality. So just some different things to look at as you're looking at the asset itself. We've already looked at location, why are they selling? But when we're looking at the asset quality, we want to look at the age of the property. Different areas, have different types of properties, that different years that things were built, and just all down, when you go up to the Northeast or the Midwest here, there's a lot of older properties. I mean, there's some new ones too. There's a lot of older properties. You need to get into the condition of these properties really deep, when you start looking at the systems, things that might be expensive to fix, electrical stuff or plumbing. Those types of things are really important to consider. And then you want to look at your tenant base. Who are the tenants? Are these young professionals? Are these blue collar families? Are these, is it mostly families that are living there that maybe are on government assistance? Is it, just get to know the tenant base and decide if this is a tenant base that you want to do business with. You're doing business with these people that are renting from you, and you really need to find out what kind of work they do. Who are the major employers in the area? Are they? Is it a steady, good tenant base that you can deal with? If and then the type of asset, A, B, or C, and is that the type of asset that you're looking to buy or to bring on as business. So number 4, timing. I hear a lot of people talk and say, well, is this the right time to buy? Is this, should I buy now, or should I wait for the crash? And just, these are the type of things that people talk about all the time, or I wish I would have bought 10 years ago, or whatever. Something a Grant Cardone always says. Sorry about all the Grant Cardone quotes and things, guys. I was just with him for 3 days and sat and heard him speak for like 6 to 8 hours every day for 3 days. So, um, but you know, one thing he says is don't wait to buy real estate. Buy real estate and wait. You know, and I like that quote. You know, and down at the bottom, this is something else he said at the real estate summit, is that rents have gone up every decade since World War II. So if you buy a property, you wait 10 years, your rents are going to be higher. When your rents are higher, more income, the property's worth more. So it's as simple as that. You know, keep it simple. Don't, you know, oh, well, I'm only have this, I'm only getting this much of a cap rate or this much of a cash on cash and all these things. You know, yeah, you want to look at all that stuff, but you know, buy real estate and wait. If you get a cash flowing piece of real estate and you can manage the property or the bed, you know, asset manage it long enough, you're going to make money on it. So there's a lot of guys that look like heroes, you know, in the last 6 years, and guys that bought 2 or 3 years ago are now not looking real good because of the way the market's going now. But these guys that aren't looking real good now, if they can hold on to this property over the next 5 to 10 years, they're going to be good, you know, and the investors are going to make some money. But you know, don't wait to buy and wait. You know, rates go up, prices come down, rates go down, prices go up. So it's cycles, and you know, over the long run, you know, people always need a place to live. And if you have a place, you know, a good location that's close to jobs and the quality's there of the asset, and it's a good piece of property and clean, and you know, all these things, you're going to be able to find tenants for this property. So and number 5, the final, is risk. So you always want to figure, you know, how risky is this investment? You know, what is my worst case scenario? What is my best case scenario? And I would say look at your numbers, the worst case scenarios, you know, and really the, you know, worst case scenario is rents don't go up for 10 years. Rents don't go up for 10 years, and let's say you've got fixed debt for 10 years or whatever it is, and it cash flows, you know, 5, 6, 7% for 10 years. You know, and if you can get a property in that shape where worst case, if rents don't go up for the next 10 years, I cash flow for 10 years. You know, that's really not a losing ball game. So you know, that's the way I look at it anyway. So I would run the numbers, worst case scenario, you know, and that's what Grant really talked about it a lot at the summit as well, as you know, what they figure on is a 3% rent increase per year and 2% expense increases. So, and then running numbers with the worst case scenario of you know, the worst case scenario being we don't have any rent increases and we don't have you know, really any appreciation in the property. So, and then when you run the numbers, 5, 10 years of no rent increases, and you look at the property and you ask the question, if this property cash flows 5, 6% a year for 10 years, and we can't raise rents over those 10 years, the question to ask is, would I still want this property? And that tells you whether you'd want to buy that property or not, in my eyes. So a lot of these things are my opinions, guys, you know, but we're open for question and answer if anybody has any questions. And has there been any questions in the chat?
No, there's no questions in the chat. Somebody said, you were talking about location, and they said Nordstrom versus Walmart customers, or I think that's what you were talking about.
Yeah, for sure.
Chelsea said, you said, you're quoting Grant a lot since you said, we're with you.
Yeah.
Rent increases with inflation. That's true.
Yep.
And that's it.
So
But no,
I
go
will,
ahead and either raise your hand, and since there's not a whole lot of us on here, you can unmute and talk.
yeah, I'm gonna go ahead and move on to the next slide. And if you have a question, just raise your hand and I'll get
Or
to
if
you.
you don't want, if you want to put it in the chat, I can read it for you.
Yep, that'll work too. So we are commercial mortgage brokers. We lend on commercial real estate. So if you have something that you need a quote on, feel free to reach out. Things that we will need to be able to help you with a quote is a T12 or a trailing 12. You know, we can get by, you know, if it's a new property that is just now under lease up, we can get by with a T3, some cases a T1. You know, if it's a new build or something, once we get that first month of 90% occupancy, you know, we can start working on a loan for that property. And OM is really helpful. You know, we don't believe a lot of the information on the OM as far as the financials, but it helps because it lets us know address and all these things of the property. And when we get T12s and rent rolls, a lot of times those aren't on there. So a summary of what you're thinking to do with the property, or if you have done underwriting and you can share with me that underwriting that you've done, that's helpful. As we get closer, I don't know, we've probably got some newer people on here. Just something to know when we're looking at the lending side of commercial real estate. To be able to qualify for a loan, you know, it's something that Grant says all the time. He says, I don't need a credit score and I don't need this and that for, you know, for a loan on multifamily real estate. But, you know, you really do. You know, if you're signing on the debt, oh shoot,
I can
it
take over.
says it's signing me out.
I'll share mine.
Okay, cool. So that's something that Grant says, but you need your signers on the loan need a credit score of 660 or better when you're looking at agency debt.
Can you see my screen?
I do.
Okay.
You're on the right page. So a credit score of 660 or better is vital to be able to get the deal done. Also, whoever is signing on the debt, your key principal, you would call it, needs to have a net worth equal to or greater than the loan amount. And also experience. So, Andre, I see your hand. It's good to see you.
Hi,
Hey
Andrea.
guys,
Hey, how are you?
long time no see. The holidays
Yeah.
took over.
Yeah.
So I have two properties I'm actually going to send you. One of them it's 152 units, but it's in Indianapolis.
Mhm.
And it does have the OM, the rent roll, all that's needed.
Mhm.
In terms of a summary of what we plan to do with the property, we're still building that based on the
Okay.
original site visits, the original site visit and just some walkthroughs we've done. But I do have my REO schedule, personal financial statement. Can you clarify what that would look like for you, for the lender?
Yeah, just a list of your assets and your liabilities. So, you know, when you start going into the agency debt, they're going to have a lot of forms for you to fill out with those things that they're going to need. You know, they're going to have you list all the loans that you have outstanding and, you know, and where you're at in that loan and just all these things. They're going to like really nuanced things they're going to have. But the initial PFS they're going to want is just, you know, just your own personal breakdown of it.
What
But
if we're working with a KP on
yeah,
this?
that's who will
Just-
need. That's the one that'll need to have those things, the KP. But right now, if you just need a quote on the property, we don't have to get into all that just yet.
Okay, and then the second property is about 70 units, but it
Mhm.
has no OM. So a lot of these deals that I'm getting from brokers are off-market deals. And he wants a response by the end of this week, of
Okay.
course. I think they're just shopping around for a price, but I got the underwriting done, and just figured everything out from what's on the websites. But if there's no OM on the property,
Yeah.
should we just include other research we completed for this property to conclude what could come about?
Well, if you send me the T12s and rent rolls and you don't have an OM, send me the name of the property and the address, and then I can look it up. You know, I can look up the property and see the location, and I can see, you know, look them up on you know, Rentometer, and just kind of see what those things are, and make sure it matches up with what's on the OM or on the rent rolls and things like that. So
Gotcha. All right. Thank you so much, guys.
yeah, so like in the initial, you know, I don't have to have OMs and all those things. But when you send me a T12 and a rent roll, if we don't have those, if we don't have an OM, you know, just let me know the address at least. So
Okay.
and,
Send
the
this to you.
SREO and PFS, those things, you know, after we get you a quote, you get a you know, your LOI submitted, and you get it accepted. We can start worrying about the SREO and PFS and all that, and we'll start getting the contract together on the loans. So
Okay. Sounds great. Thanks so much, guys.
yeah, thank you. Glad to see you here.
You too. We already submitted an LOI for one of them. So the other one is the other one I'm
Awesome.
working on, but you got to do it. Get that
Yeah,
LOI out. Get the
yeah,
momentum going, you know?
for sure. Yeah, send it over. I'd love to take a look at it.
Thanks so much.
Yeah. All right, go ahead and go to the next slide there. All right, what can you do today to be ready? You know, you heard Andrea say that she has a KP on the deal. A KP is your key principal. It's somebody that can sign on the debt. You know, it's somebody that has the net worth, has the experience, and all those things. The bank is going to say, okay, I'll lend them money on this project. So what can you do today? And let me just go ahead and say also, if you have 2 or 3 partners, and let's say you're looking at a deal that's, I don't know, just throwing out numbers, your loan is going to be $5 million bucks. If you have 3 partners that can all combine their net worth to come up to that 5 million or 6 million bucks, whatever it is, we can do that and get you all accepted as as KPs on the deal. So we don't have to have that one big dog in you know, there to be able to sign. We can combine people to be able to get it done. So so what can you do today? Make sure your credit is in order. If you're ever going to need to sign on the deal at all, you know, we're always running into different things, you know, with you know, people coming to buy, and we look, and they've, you know, got a lot of other things they've bought that year. Maybe they bought another business or 2 or 3 businesses, and the credit team starts looking at their stuff and saying, man, this person's overextended now, you know, and we didn't realize they had done all these things all this year, you know. You know, so there's a lot of different things that happen in the process. You know, and really, even if your credit score is, you know, you have a good credit score, and they look and they see a lot of late payments, that's going to be a deal killer as well. But credit is important. It's not, it gets less important as your portfolio gets larger. You know, but it's still important. You know, if you have some really bad marks on there, or even going after $100 million deal, and you've got a net worth of 200 million, it's going to hold you back from doing things, unless you can have somebody else sign on the debt for you. You know, start working on your PFS, SREO. You know, get your personal financial statement out, write it in a notebook, and then as you pay bills down, you know, that grows your net worth. Or if you buy an asset or two, that grows your net worth. You know, start keeping track of it. And you know, if you're not nurturing something, just like if you're married and you're not nurturing your marriage and taking care of your wife, that's going to go away, or that relationship's not going to grow. Same with your financial situation. If you're not looking at it and keeping track of it, it's not going to grow either. So start getting your bio together. If you've gone to workshops and masterminds, if you've taken courses, I had somebody not too long ago that I talked to, and they're wanting to buy a 10-unit property. And I don't have any experience in multifamily and this and that, and I can't do it. I'm going to need a partner. And I find out that this guy has wholesaled, it was something like 75 houses in 2 years' time. And I said, man, you've got experience. Yeah, why didn't you tell me this off the bat? This is experience right here, buying and selling deals, man. And I said, you need to get your bio together and put that in your bio. And I said, we'll be able to get this deal done for you. And so just, nothing is too small to put in there. So make sure that you get those things together. The banks and the lenders and the underwriters realize there's stair steps you have to take to be able to qualify to KP deals, and they like to see those steps. So you can work on raising capital. Today you can start talking to people. Hey, I'm shopping for deals. Have you ever thought of investing in real estate? Or how about investing with me and invest with me and let me deal with the toilets, termites, and tenants, and you don't worry about any of that. Start doing those things. And I lost my slide there, babe.
I got you.
All right. All right. And so, or finding a business where you can just make more money to invest in real estate. So that's always an easy way into real estate, is making more money. So, and also we have a referral program. We have some deals in the works right now where we have referral programs that are going to get paid if we get these deals closed. We got referral partners that'll make 6 figures on these deals if we close the deals. So join our next referral program call and learn about. And actually, we have that on YouTube now, on the Multifamily Freedom Chasers YouTube page. You can find our referral program on there. We have it's a 35-minute video of how our referral program works. So. All right, you can move the slide, and we lost our slides again.
Sorry, I stopped sharing.
Yeah.
Sorry, guys. My bad. There you go.
All right, we've been doing a weekly verse every week.
Yes.
And
I'm sorry.
yeah, I can't see it, so we're seeing everything you do.
I know.
Yeah.
I'm sorry. I just
So the week's verse, Proverbs 1:7, the fear of the Lord is the beginning of knowledge, but fools despise wisdom and instruction. So I talk to people every day that think they know everything, and talking to them for a few minutes, you can tell they've never done a deal and they don't know anything about it. But when you talk to them, they really think they do. So that don't be a fool. Take in the knowledge and the wisdom from others as much as you can. I learn from other people every day. So I actually coach 3 different basketball teams right now, and I learn things from the kids and everything else while I'm coaching. So no matter who you're with, you can always pick up something new. So.
and I shared our IG handle. That's what I was doing.
Yeah.
IG handle on the chat. If you guys want to follow us, you'll see a cool video of my boys on there being interviewed.
Yeah.
YouTube
they were
channel.
interviewed about their YouTube experience. So.
Well, I just want to let you guys know I have stopped thinking for the rest of the year. I do not know what our next topic is going to be. I am ready for Christmas.
And Shelly's going to be cooking for 40 people on Christmas Day. So
We
we're going to have a bunch
a
of
lot of
people
people
at our
coming
house.
to our house. Yeah. That's the blessing we have, is we always have family around, which is good. January 10th is our next Zoom call. We're not gonna do the next one because it's
Of
gonna
the
be the
holiday.
holidays.
Yeah.
So I don't have a topic for that yet, but we will see you on January 10th. And if you join the Facebook page, the Facebook link that JJ shared, you will be getting the events update on there on when we will be on. And then I'm not sure if anybody else is doing anything. I don't think anybody's doing anything next week because Monday is Christmas.
Yep.
Here is
Go
what?
ahead.
Here's our contact information again. Take a screenshot, take a picture. I don't think you have to take a picture. I think you just scan the QR code. Here's a funny Christmas card of us.
That's our Christmas card for this year. So
Jerry fell off the roof, but he's okay. Just kidding. That's, you know,
I was hanging from a harness. But,
yeah. Does anybody have any more questions or smart remarks?
and I see Elise posted your interview, I believe.
My interview?
She did her podcast with you. It's in the
Yeah.
chat. So Shelly was on
Did she?
Elisa's podcast the other day, and it's posted in the chat. So if y'all want to check it out.
Yeah. Yeah, that's great. I'm glad she did. I didn't see her on here. Oh, there she is.
Yeah,
Hi,
so
honey.
Shelly and Elise are both actually Amazon. Now they're Amazon best-selling authors. So
Yeah.
the book that they was both co-authors of went best-selling on Amazon last month. So that was a big deal for them. So
Yes. Yeah, go ahead and check that out. I don't think I've seen it yet. We did that a few weeks ago. Here's
and,
our contact information again, guys.
yep. And Jeff has his hand raised. Go ahead, Jeff.
I just had one other question. Have you seen the last 5 or 10 deals you've looked at for funding? How big are they? How small are they? What kind of problems did you notice with those? Are they easy to do deals, or are they just deals that just nobody will do and can't find the investors to go with it?
Well, I can give you kind of a few that we've got in the works right now.
Okay.
We have one that I have not been able to find a lender for right now. And it's a nice deal. It's a nice project. I like the project myself. But we can't find a lender for it. And I'll kind of give you guys a rundown on why that is on this one. It's a oceanfront property in Carolina Beach, North Carolina. Beautiful property built in the 80s. It was a timeshare resort, 40 units. So every unit is set up like a condo. It had a lot of damage from a hurricane a few years back, and the guy that owns it currently bought the project, has been working on it, and his local bank, he had a construction loan from his local bank, and they have stopped funding the construction end on the project. They said we're having to halt. They're running low on money that they're able to lend out now in the current market. They have I don't know exactly what their issue is, but he's still got 5 million in construction he has to do on the project.
Wow.
And the bank has halted, and they said we can't issue any more draws on the construction. So he's 10 million into the project, needs another 5 million. The after rehab value of all the condos, he's planning to sell the condos off individually, is $27 million. And so we're looking for somebody to come in just a little over 50%, like 55, 60%. And nobody's wanting to do the deal because they're thinking we're not going to be able to sell condos, in this marketplace. Oceanfront condos are not going to sell. In Carolina Beach. If it was Florida, Miami, Florida, we'd be able to sell them, I think, but and they don't like the idea that it's mid-construction. We have another one right now that we're working actively. Well, we have one, it's a purchase of a printing company in Miami. We have financing for the guy. It's $1 million purchase. He's got, it's a 15% down SBA loan. The seller is offering 10% of that. So he's having to come to the table with $50,000. But at the closing, get this, guys, you want to hear this? At the closing, he's going to get a check for $300,000 in working capital. So we're funding the deal, and he's getting a check at closing. We've got 6 duplexes and 2 8-unit buildings just outside of Detroit in Dearborn, Michigan, that we're in the middle of funding right now as one big portfolio. That's the loan amount. Each of the 8 units are having to go together on one loan as a 16-unit combined. I think the purchase amount is like $900,000 for those, and the duplexes are like $700,000 for the 6 duplexes. So that was in the beginning stages. We have one that just fell through in December, but I think it might come back here in January. It was 5 single-family homes in Fort Lauderdale, luxury homes that they were purchasing to do to do fix and flips. The purchase price of these 5 homes was $175 million. And they're after, well, that's the total cost with construction and everything. So that our loan amount's like $150 million. And the borrower is upset because the family office that's funding the deal, they have about $700 million in a family office, and they're excited to fund the deal. But they said they can't fund it until January 8th. And the borrower's upset right now and wants to close this year, and the family office said we're not working the holidays. And so I don't know if it's going to close. I hope it comes back around and we close on January 8th. But at this point, it's kind of up in the air. So those are just a few of the deals we got working. We're working. What else is there? We got, I think it's 8 or 9 single family houses in the Indianapolis area that we're doing a portfolio on right now, portfolio loan. We got a really cool deal we're working right now that's not real estate related. But we have a borrower that is a commodities broker, and he is working out a big sugar purchase between the country of Ghana and a sugar supplier in Brazil. And they're wanting to purchase, it ends up being about $20 million of sugar per month.
Wow.
And the country of Ghana is actually looking to do that for a year to supply their own country. And if it works out, they have a really good port on the east side of Africa, and are looking to be able to expand and send sugar and wheat and all the different commodities across the continent from their port. And so this commodities broker is tied in with the finance minister of Ghana. And so we're working on doing the funding on that one. And now that same commodities broker has a deal with China to purchase sugar as well. That's about, we haven't seen the total numbers, but it's 5 or 6 times larger than what Ghana is needing. So, and he's actually told me on the phone this week, we had a Zoom call with a trade finance company, and trying to get the funding lined up. But he was telling us that he's not sure if there's enough sugar in all of South America to be able to fund what China's wanting to buy. So, just some cool stuff that we've been getting into lately. But we got other deals in the works as well. We've got several new constructions, apartment complex. We're waiting on, the borrower is waiting on final permits on a 200 unit complex in Port St. Lucie. That's a $34 million new construction project. We've got another subdivision in West Palm area. It's going to be 9 luxury homes. I think that one is 7 or 8 million for the 9 luxury homes. Yeah, there's other ones. That's just what's coming to my mind now. So hopefully that helps you a little bit to know what we can do and things. So Yeah.
We do little ones as well too,
Yeah.
below
We
500.
closed one a few weeks ago in Houston. It was a smaller multifamily, a 5-unit in Houston. So
Yep. Anything above 100,000 we do.
yep. So yeah.
Thank you.
All right.
All right. Well, thank you guys for joining tonight. You didn't have to because it was close to Christmas,
Yeah.
but
Y'all have a Merry Christmas.
you guys are pushing, so you're not letting it go for the rest of the year.
Yep.
Like I said, I think my brain is shutting down for the rest of the year.
We're
But
still going to be working.
as we've got all kinds of stuff going on, so
Well, we're
Yep.
still working through the holidays. We will be heading. Our son's playing in a basketball tournament in Gatlinburg, Tennessee, the 26th to the 29th. So the day after Shelly cooks for all these people, we're going to be heading out of town. But I'll have my phone and computer with me. If anybody needs anything, feel free to reach out. So
yep. Thank you guys. I will leave
Thank
you
you.
guys with some music.
Thank you. Merry
Happy-
Christmas.
Thank you for putting us
Merry
on.
Bye.
Very
Oh,
Happy
yeah.
New Year.
guys,
Merry
Happy
Christmas.
New Year.
Merry
Bye-bye.
Christmas.
Be safe.
Bye.
see
Thank
y'all.
you.
When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow. Prove what? Getting money, never losing no. But I'm broke, but now I'm living adding digits, counting zeros and some decimals. And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico, I invested though when I let it grow. Benjamins, I got a pocket full. Rich your income and your taxes low. Spend it right and then invest some more. And if you don't believe me, it's my doctor down. What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the jet. I buy apartments, I send checks. Young billionaire went undercover, help y'all discover who did it best. Just bought 2 choppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know, like I know, you getting cash flow.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as